All right, welcome back to the Rice Report, everybody. I'm very excited for this interview today. It's a different perspective on the markets and the economy and the things that we're looking at. As you know, here at the show, we talk about the three things you're not supposed to talk about in public, which is money, politics, and religion, which is all we cover here. We just go against fully defiant against the norms and narratives. We want to make people feel uncomfortable. We love to have different points of view on this show. We love to have people who are challenging the narrative, the norm. Never will I endorse what anyone's saying as truth. I will throughout the conversation, but it certainly is something to think about. Like I think this guest today is going to be mind blowing for some of you. So I'd like to introduce Chris Galizio here onto the show. Chris comes from the TradFi world. He was a fund manager. He just has a movie out called The Money Game, which I advise all of you to look at. It's free online. View this thing and understand that our system right now is not as it appears. And I think that's the overwhelming theme of 2025 and probably beyond, is that things are not as they appear. So welcome, Chris. Thank you for stopping by.
Thanks for having me, Eric. I'm happy to go through this interview. It should be really interesting.
Absolutely. Yeah, we're gonna give a little preview of the film to everyone here in this conversation. I advise all of you to watch it. Chris is available on social media. He's going to be joining us on Bitcoin Today on Friday. Excuse me, talking about these very things. But I think importantly, Chris, give everyone a rundown of your past and your career and how you got to this point.
Sure. So I was a large cap growth manager at Fidelity. Before that, I ran emerging markets. So I've had a lot of diverse experiences. In during 2007, our track record was phenomenal. We grew our fund from at Fidelity from 20 million to 7 billion because we were doing great. 2008, 2009, 2010 hit. All of a sudden, it seemed like stocks started disconnecting fundamentals because when the Fed stepped into markets, the entire system disconnected, right? So stocks just kept going up for no reason. It just didn't make any sense. 2019 hit. I was running a hedge fund called Focus Capital, and again, nothing was making sense. This Fed stepped into the repo market, and interest rate. We saw the repo market. Interest rates were 1%. All of a sudden, the next day they were 10. And
Yep.
we were sitting there going, what the hell just happened? The Fed stepped in and bought every single short-term bond, the entire one, everything. So they basically nationalized the market. So that made me think, oh my God, what the hell's going on? Then we had COVID, obviously. Unemployment hit 33%. Stocks went up because the Fed just
Yeah.
pumped money into the system, right? So now I started to say, oh my God, what the hell is happening? So I wrote a white paper called the $340 trillion problem. It's basically referring to the dollar system. The debt is completely unpayable, right? So you have $340 trillion of debt, which is unpayable in real terms. And now what you're noticing is they're manipulating markets. I met a director just kind of randomly.
And before you continue with that, there will be many people who say they're not manipulating markets. We all know they're manipulating markets, but what do you say to people and how are they doing it? Describe that.
It's the money game. It's exactly what the name of the movie, right? So what they're doing is they're controlling interest rates. When you remove risk from a market, the ecosystem changes.
Hmm.
Right? So in 2007, 10% of the market was passive. By today, it's probably 65% passive, and maybe another 25% quant, and then the other 10% is my opinion. It's either growth or closet indexing. So when the Fed stepped into markets, the ecosystem changed, right? And it shifted from an investing system to a financing system. So you're not investing in these companies; you won't get your money back, right? It's all that's happening is think of so Professor Gardner in Money Game is going to describe this. He's going to say so as interest rates fall, asset prices rise.
Hmm.
Finance is the simplest subject you ever learned. If interest rates are 10%, the value of that $1 paid annually is $10. One divided by 10%. It's the only formula you need to know. If interest rates fall to 1%, now it's one divided by 0.01%. It's $100.
Hmm.
Right. The time we shot the movie, interest rates were 0.66%. And so the value of the annuity is $152. So Professor Gardner, and by the way, that's real term. That was nominal, but you should be thinking in terms of real terms, right? Professor Gardner will say, "Who here is willing to give me $152 if I give you $1 every year for the rest of your life?" Dumbest kid in the class says, "Hell no, we'd all be dead by the time we broke even." Gardner turns to him and says, "Correct." That's what's happening. Then he says, "What would happen if interest rates go negative?" And then he turns and he says, when interest rates go negative, all assets are worth infinite. My coffee is worth infinite. My whiteboard is worth infinite. My desk is worth infinite. Does that make sense? And of course, it doesn't make sense. And that's the money game, right? And then he says, do you see why the rich have all the money? The stocks are trading infinite, right? So you see all these companies that are losing money. And by the way, the entire time, the movie we have, the villain in the movie is the CEO of the next big thing. It's like Snapchat, TikTok, all these companies that lose money. Snapchat has, last I saw, Snapchat has negative gross margins.
Yeah.
What's the value of Snapchat? 0. What's a trade at? Infinite. Right? So what everyone's doing is conflating valuation with value. And if you take a look at a company like Boeing, which has lost $10 billion a year for the last 6 years. If you asked a 10-year-old, how much would you pay to lose $10 billion a year? The 10-year-old would laugh at you and say 0.
Right.
But finance professionals can't figure it out.
Right.
Because they're watching the price go up. They're saying, well, the price is look, the price is trading 170 billion. But a 10-year-old would tell you it's worth 0, right? So what everyone's doing is so Professor Gardner will raise the book, The Efficient Market Thesis. He laughs. He throws it in the trash. He says smart people thought the world was flat once too. And then he raises the book, The Efficient Market. Then he raises the book, The Story of the Great German Inflation. And he says the most underused books in finance are history books.
Yep.
Point being that governments manipulate markets. How are they doing it here? They're manipulating interest rates. It's called quantitative easing. Right. So they're manipulating markets. So there is no way to get your money back from markets. And by the way, now I would argue that the system is rewarding companies that need financing.
Oh,
right?
100%.
Not companies that make profit. And if you think about that, it all comes back to like George Orwell. Freedom is the freedom to say 2 + 2 is 4 and not be persecuted, basically what he was saying. So 2 + 2 doesn't equal 4 right now. The sustainable growth form, if you go back to finance, sustainable growth equals ROE times 1 minus dividend yield. All right, so let's just make it easy for the finance people. No dividend. So growth equals ROE. Put it in layman's terms. If I can't get financing, if I cannot get any financing for 10 years, if I build a restaurant that pay $1 million a year for it, and I make 10%, ROE of 10%, in 10 years I could build my second restaurant. If the ROE was 20%, I could build my second restaurant in 5 years. So that's sustainable growth.
Right.
So all these companies that lose money aren't sustainable. You're not investing in them. You're providing the financing. The ecosystem changed, which is the biggest point in money game.
And
right?
describe that to the layperson that doesn't understand. Like I've run a public company, so the higher your stock price is, the easier it is to get loans. I mean, it's collateralized for loans.
No. It's more mechanical than that. If you actually talk into Grok and you say, if the entire system was passive, because that's basically where you're watching, right? When the Fed the biggest line in money game. Well, let me go through the scene with you. Professor,
don't do the scene. Just speak to the normal person. I think it's going to help them out a heck of a lot more. They'll watch the movie.
No worries.
We'll lead them there. Yeah.
So when you remove risk from an ecosystem, quantitative easing, the ecosystem changes, right? So if you talk about if you talked into Grok and said, so the point being that the ecosystem of capitalism has changed, 90% of the market is now passive and quant. The market isn't thinking, right? In the movies, we say the lions have been eaten, active managers. It's a bunch of followers, quant, following followers, passive. It's like a cat chasing its tail, right? So there's no one setting prices, right? So think about what happens in a. So if a company issues shares, if you talk into Grok and say, what would happen if you issued shares? Would that actually, if you issue share, nobody's setting prices, nobody's calculating it. So all that's happening is when you issue shares, like a company like MicroStrategy, like Palantir, like CrowdStrike, take your pick. All these companies that issue shares, what happens when they issue shares, the passives are actually forced to buy at the time that they after the quarter, right? Because if you had 100 million shares and all of a sudden you have 110, the passives have to buy. So my belief, the stocks aren't going up because they're beating expectations. They're going up because they're issuing shares and the passive is forced to buy. Let's put that in layman's terms. Last quarter, Palantir beat expectations. They had $340 million in profit. Stock went up $25 billion. So in order to get back, I'm sorry. The amount of shares they issued if you calculate the number of shares from the time that they from the year last year to today, the increase in value is 25 billion. So in order to at $340 million a quarter, it'll take them about 75 years to get back the money that they paid this quarter for those increased shares, right? So everything's working. So the system is now rewarding companies that issue shares. And by the way, the system also punishes companies like ZimCorp, which over the last four quarters earned 4 billion. Over the last 4 years earned 16 billion. Stock right now trades at 1.7 billion. Mm-hmm. How can one company trade at 120 times revenue, and the other one trade at 0.5 times trailing
par value? Yeah,
it doesn't make sense. So that's proof that it's not humans in markets anymore. Yeah. It's machines. So
I've been saying this for a long time, Chris. I think I don't know what your numbers are, but most consistent passive buys are algorithmic. So as soon as there's a readjustment, the algorithm buys. It's weighted on government information, so jobs numbers will trigger buys. Walk through the passive structure, the algorithmic buying.
There's actually two different things going on there. There's the passive buying, and then the algorithms that follow the passive. Mm-hmm. Right. What happens is at the quarter, if a company issues shares, the passives are forced to buy just the index, right?
Right.
More shares, so they have to.
Yeah, they're rebalanced. Yeah.
Right. So what happens is they buy, and then the algorithms are basically it's a bunch of followers following followers, like a cat chasing its tail, because the algorithms are just following price, with the built-in assumption that markets are efficient. Right. So they see, oh my God, Palantir just went up, and then the quants step in behind it, thinking that there's someone else setting prices. But there is no one setting prices. There's no humans.
Right? It's all Pied Piper.
It's all Pied Piper. Well, it's not just Pied Piper. And you have to understand there's nobody thinking anymore. That's right. The big red flag, right? The big red flag is people are always talking about how, well, the market hasn't reacted to that. The market didn't react to that. The market didn't react because it's not really a market anymore, right? The entire system is now a policy tool of the Fed. The market doesn't predict anything. It only reacts to the Fed. So the Fed cuts interest rates, stocks go up. Feds print money, stocks go up. Right. If you look at the poster of Money Game, it says Money Game, don't get played.
Yep. It's a great poster, by the way.
You're not investing in those companies, right? You're providing the financing. You're getting played to finance U.S. business. And we can talk about that in more detail on how, as a portfolio manager, think of the petrodollar system, right? So balance of payments equals your current account minus your capital account. Those have to balance, or else the governor that controls imbalances in economies is currency, right? So we know that we've been running a current account deficit for 40 years. So how did the currency not fall? The capital account, because money flowed into the U.S. to buy U.S. treasuries or to buy U.S. stocks. If you look in 2007, if you look at the net international investment position of the U.S., it was probably 10% of U.S. GDP, maybe even 4% back in 2007. Now it's 85%. So as the U.S., and we keep, everyone's seeing this now because it's the petrodollar system, right? Mm-hmm. So the petrodollar system is that we'll run deficits. We'll take those. We'll send dollars overseas, but we need you to take those dollars and then recycle them into U.S. stocks, into U.S. bonds.
Yep.
Right? If the world stops recycling that money, well, then the capital account turns negative, your current account's negative, and the governor that controls imbalances in economies is currency. So my belief is that, and I keep saying this on LinkedIn, that Money Game will timestamp the biggest currency shift in history, because you're sitting at a point in time where that capital account is now reversing. That was the U.S.'s exorbitant privilege, right? Because no matter what they did, they could run deficits as long as money flowed back into the U.S.
Everything was fine.
Yeah. Everything's fine. But once you see that reversal, and you can see it on the chart, net international investment position, that it reversed. Once it reversed, that's when we put the tariffs on, right? Because we can't let that happen. If that reverses, it's the end of the dollar system, right? And to me, it's a certainty of what's going to happen, right? It's not a question. No investor would look at us and say, well, that they'll pay those $37 trillion in bonds. By the way, the $37 trillion in bonds is the smallest part of this.
Yes.
Right? You're not including Medicare, Medicaid.
Yep. Unfunded liabilities.
Correct. Which I don't know what the number is, probably another 100 billion.
Yeah,
Um,
it's no, it's unfunded liabilities are much higher than that. It's like
that's one thing.
4.5 times the known deficit or the known debt.
Correct. And so if you're talking about 37 plus, call it 120, call it 160 billion, that's all on tax receipts of 5.2 trillion.
Correct.
Right? There's no way to pay that back. So it is, if you're an investor, it is a certainty that the currency crashes. The last place you want to be is in bonds. So the bonds are the sucker at the card table, and that's the point with when we turn back to Bitcoin, right? We know that $340 trillion is unpayable. So the 340 trillion has to flow into the $80 trillion stock market, which we all know is a bubble, has to flow into the $20 trillion gold market, into the $4 trillion crypto market, and into the $1 trillion silver market. So how are they all going to squeeze in? Well, the answer is the prices of all those things below it are wrong.
How so?
Because there's $340 trillion of unpayable debt that's going to have to squeeze into the the $4 trillion crypto market and the $20 trillion gold market, right? And everyone says, well, there's not enough crypto or there's not enough gold. The crypto doesn't, as you know,
There's not enough Bitcoin. There's way too much crypto, but there's not enough Bitcoin.
there, right? So there's only 21 million Bitcoin, right? So there's no way to increase the number, and the number is
Right.
never going to change. So the 340 trillion has to flow because we know that's worthless. We know that those are just pieces of paper that are worthless, and that's the
Yep.
$340 trillion problem that I wrote a white paper about in 2020 when I saw that when I saw the repo market spike. Right? So
So
I wrote the white paper, then I made the movie to make it more everyday language for people.
yeah, we're gonna keep breaking that down here too. I think one of the more interesting things is a mentor of mine about 15 years ago when I was talking about the bond market. He said our bond market is kind of like the New York Times best-selling author that gives his buddies friends so that they buy a bunch of copies and get them on the New York Times bestseller list. That's
Right.
exactly what happens with foreign capital being sent overseas. There's clearly a lot of that coming back in and buying our bonds and living off the interest. So how does this cycle or how does this process end in your view? I mean, no one knows, of course, but where does this all go? I mean, we are financing public companies. That's obvious. Like the stock market is not a free market.
What's
In
number
fact,
one?
you can look at it from any perspective and say it's not a free market. You can say 51% is directly attributed to government spending. That makes it socialist in many ways.
Well, it's 100% socialist.
Yeah.
It's not. So the theme. It's the theme of the movie, right? The theme of the movie is capitalism requires risk to allocate scarce resources.
Yep.
Professor Gardner will say, but here's the problem, right? Because by driving interest rates down, you drove asset prices up. What he says is, but here's the problem. What would happen if you remove what would happen if you remove the lions from the savannah? The active manage the risk. Well, the gazelle population, passive investors, would explode, but
Yep.
then they'd be competing over scarce water resources, Bitcoin, gold, silver, copper, and die off. And then we have the biggest line in the movie, correct. And when the Fed intervened in bond markets, they broke the ecosystem of capitalism. It's not capitalism anymore. It's a
No.
centrally planned economy. But that's why markets don't react to anything, right? It only
Yep.
the market doesn't react. The market doesn't predict anything. There's no humans left in markets. Nobody's thinking.
Hmm.
It only red, and that there couldn't be a bigger red flag than that. If you look at the VIX, it's at an all-time low. Well, why would the VIX be an all-time low? Because it's being manipulated. The prices are being manipulated. Prices of all of it are being manipulated. When there's one quote I wanted to put in the movie, I never quite got it in there, but was when the government assumes all the risk, it's the currency that's at risk. It reminds me of a scene from Superman. Lois falls out the window. Superman dives down and saves her and says, "I've got you." And Lois says, "But who has you?" In other words, what are you backed by? You're not
Hmm.
backed by gold. You're not backed by crypto. I mean, El Salvador is the smartest country in the world. They backed themselves by something real.
Yeah. Yeah. 100%. Yeah. And we'll make sure that there's even a legal distinction between Bitcoin and crypto. Crypto is man-made primarily. Most of it is just pre-mined fiat replication on a
Correct.
blockchain. Whereas
And
Bitcoin has actual scarcity that you have to put in work to release from the system to put into the free markets.
correct. I mean, it comes back to the opening quote in Money Game. The task is not to see what no one else sees, but
Yeah.
to think what no one else has thought about that which everybody sees. Because you're all seeing that things don't make sense. GameStop trading at 20 billion. By the way,
Yeah.
remember GameStop was at 200 million. And then the Reddit guys, if you remember in the movie, it says the Reddit guys finally figured out how to trigger the stampede of algorithms.
Hmm.
Just aggregate a bunch of buyers. It's like waving a red flag in front of a bull.
Yeah.
That's how we're trying to describe it in the movie. Yeah, so it's
And I love the opening line because it reminds me of one of my favorite quotes is only those who can see the invisible can achieve the impossible.
correct.
And you are kind of seeing what is they try very hard to keep the veil on the illusion.
Correct.
It's a massive industry, a multi-trillion-dollar industry that is trying to keep the veil over this. But these are obvious things that people can see if you dig far enough. So, what was your breaking point going from living in that world to realizing that that world is an illusion to now exposing that world? Where was your jump-off point?
Well, by the way, we have this in the movie. Gardner, the James turns to Gardner and says, "Why did you leave Wall Street to teach community college?" And he says, "Because he says the system's a game now, James. Success in the current system is requires speculation, and I won't speculate with someone else's money." What we're really trying to describe there is moral hazard, right? If you think about it, why did the humans lose? Because only 4% of growth managers beat the index over the last 10 years. Why?
Hmm.
Because they were using math, right? And they were trying to protect their clients. So as my coffee went from $3 to $300, they looked and said, "Well, I'm not buying that." Right? So by the way, why did the machines win? Because they have no morals. It's moral
Right.
hazard. Right? So when interest rates went negative, and we should be as finance people, we should be talking real terms, because we all know that inflation's at least 10% right now. As a
Yes.
matter of fact, the way I would describe inflation is money supply growth. There's no other way.
Yeah.
Why
It's
go?
inflating money supply. That's the definition.
Correct. So let's forget about the price of my coffee. Just how much money supply did they grow? So let's forget about the CPI, which we all know is a CPI. We know they're lying about it, right? There's no way inflation 3%. Just go to the store, get a
Yep.
car, do anything you want, right? There's no way inflation 3%. So you know they're lying to you. Why don't we just go back to the regular definition, which is money supply growth, because that's what it is. This whole system is a lie. So if you remember, James, you saw part of the movie. James keeps asking Bryson, but how does your company make money?
Right.
Right? Bryson's the CEO of Tap It. It's the next big thing. It's Snapchat, TikTok, whatever else. How does your company make money? We're not really asking. James really isn't asking Bryson, how does your company make money? What we're really doing is asking the audience, how long will you tolerate a system built on lies?
Hmm.
This entire system is built on lies. So that's why we're making the movie, to try to explain what's going on. And by the way, it's a certainty what happens, because once the government steps in, it's a Hotel California. They can step in anytime they want with QE, but they
Yep.
can never leave. Because just picture a world where interest rates go from 4% today to 10%. At 10%, that's $3.7 trillion a year just for debt financing,
Yeah.
right? And by the way, that doesn't even in tax receipts right now are 5.2. But if interest rates were 10%, tax receipts would be 4 or less.
Yeah.
It would have to be 100%. So that's why it's a certainty that the currency is going to crash. By the way, the more the system, the more they print, the more the system misallocates resources. Again, the theme of the movie: capitalism requires risk to allocate scarce resources. The more they print, the more the system misallocates resources. The more we pour it into companies like GameStop, which don't do anything.
Hmm.
Right? The more
Don't
the
do anything. Yeah, they're actually shrinking in business, so they're growing in stock price.
correct. And by the way, you should notice the same with MicroStrategy. MicroStrategy is
Yeah.
the best performing stock in the world. Why? Because there's two parts of MicroStrategy: issue shares, which I would argue sends market caps up because it forces the passive to buy,
Yep.
and then they take that and they put it in Bitcoin. So it's a double whammy. But if you look at their revenues, they just understand that MicroStrategy did not get their money to buy Bitcoin from selling software. They got it from
Right.
selling shares, right? And by the way, Donald J. Trump stock's doing the same thing. GameStop now is doing the same thing. The other thing
Yep.
you should know is that every company in the S&P 500, any one of them, or any of them in the Russell 3000, can issue shares and buy Bitcoin, and the stock will go up. Because issuing shares, that's so. If you get to when you get to the end of it, of Money Game, you'll see one of the closing quotes from Gardner: "Our system is broken. It's clear now that money printing sends asset prices up. What's less clear is it also slows the real economy as we misallocate resources. Now we have two different economies: the financial economy and the real economy that no longer work together. Money printing doesn't create wealth. Wealth is created by all your hard work. That's the message we're trying to send. But the thing for our purposes, we should know that the more they intervene in markets, the more it misallocates, the slower the growth in the real economy. That's why I know there's an inevitable. It's inevitable that the currency is going to crash. Right? It's already crashing. Right? It's already crashing versus gold. It's already crashing
Sure.
versus silver. It's already crashing versus Bitcoin. But there's no way out for them. Right? There's no way to solve this problem. And by the way, if the currency crashes, it's a return to capitalism. Because
Yes,
this is not a capitalist system,
that's
right?
correct.
People ask me, like, well, why'd you make Money Game? Because I know how the movie ends, right? My coffee goes from $3 to $30. Everyone turns to an authoritarian leader like Hitler to save them, and we wanted them to blame the central planners, Jerome Powell, Janet Yellen, and return to capitalism. Because we know how it's going to end, right? It's a certainty. So there's just the debt's unpayable.
Well, I don't think the intention was ever to pay it anyway. I think that the central
Correct.
planners, the entire purpose was to use it as leverage points to continue to print money. But I think that you define something I talk about quite a bit, that the average American doesn't realize that the economy and the stock market are not only are they not the same thing, they
Correct.
couldn't be further from each other.
Correct.
We're in stagflation right now, high unemployment, high inflation, and a stagnating economy. Although they're telling us it grew it now, it's 3.3 last quarter. I don't believe any of these numbers. I don't think anybody should believe any of these numbers, regardless of who's in office, because the guy in office isn't actually putting the numbers out; he's just reading them.
Correct.
Most of the people who put them out the last 8 years are still in office today. They're almost impossible to fire. So we're not getting the real information, and we are seeing a K-shaped economy blow up right before our eyes. I mean, there is no middle class. The middle class doesn't exist. They've been vaporized in the past 20 years. How you said, yeah, I know how this movie ends, and we go back to capitalism, and I couldn't agree more, because I think that's the thing where people listen to people like you or people like me who are talking about the flaws in the system, which is not only flawed, as you say, broken. It is a broken band-aided system. And we are anxiously awaiting the end of that system, because at the end of the rainbow, you have pure capitalism, you have
Correct.
fairness, you have a system that is not centrally planned by our lizard overlords in Washington D.C.
So so Ayn Rand said the worst type of capitalism with government help is the worst type of economic phenomenon.
100%.
Why though? Because it's not capitalism.
Correct.
That's the thing. When she said that, it's like, yeah, that's because it isn't capitalism. As a matter of fact, I wanted to put a quote in there. Capitalism is the worst type of economic phenomenon because it's not capitalism. Because what it really is governments picking winners and losers. Right. By
Mhm.
the way, you're seeing it again. You're seeing Intel. They're going to invest $10 billion in Intel. So this whole
They
thing
already
is
did. Those are
right.
those are grants given by the last administration. Now they want the 10% of the pound of flesh from the last administration, when the actual reality is, from an Austrian perspective, it would be, give me the $10 billion back. We
Correct.
shouldn't be granting money to private companies nor taking stakes in them because somebody else granted it.
Of
I don't know
course.
why this is a hard thing for people to understand, but the further government is from the markets, the freer they are. The moment the government gets involved, they're no longer free markets, no matter what your opinion is. That's just a fact.
And that's the point about, and the big point is they intervened in bond markets, because
Yes,
once they intervened in bond markets, the system shifted from a capitalist system to a centrally planned economy, right?
correct.
Now the entire system is misallocating resources. There's no way out of this, right? Because it's not capitalism anymore. So the whole strength of the U.S. system was always that it was capitalism, and it was someone else is pricing it, but now there's no one pricing markets.
Right.
That's a big top. That is the biggest topic, I would argue, in the world.
I think you've eloquently explained why people will say nothing makes sense anymore, right? Like I was saying that 4 years ago. I was like, These markets don't make sense. How can gold go up on the same day that stocks go up?" And now with passive followed by algo trading, that's a pretty obvious point that people can turn to and say none of this is all an illusion.
Correct. So, as a matter of fact, the system you're living in is the petrodollar system, right?
Yeah.
Designed by
Well,
Kissinger.
I'm living on a Bitcoin standard, but everyone else is in the petrol system. We have to
Correct.
go back and forth from the matrix for sure.
So one of Kissinger's quotes, it's not the truth that matters, but the illusion of truth.
That's right.
So he's convinced the entire world that $340 trillion in debt is riskless.
Right.
It's a risk-free asset. So if you go back to, if you look at all the PhDs and the finance and the CFA and all the professionals, they've been indoctrinated in a system which isn't true.
Yeah.
So the 300, there couldn't be more risk than lending to a country that can't pay you back in real terms. So the whole system is a lie,
Yeah.
right? There's no way. So the whole thing was the thing that shocks me is you have intelligent people, PhDs, who are indoctrinated in the system, right?
Well, they're the most indoctrinated. They literally get a doctorate for how indoctrinated they have become. They have
Correct.
learned the system of illusion to teach it to other people. And I often there's so many examples of this, Chris, throughout all of society. And people would say, "Well, we can't live in a total lie." And I'm like, "You did until you were like 9 years old. Every person you talked to told you a fat man in a red suit flew around with reindeers and dropped off Christmas presents in your chimney.
Correct.
You're telling me society can't be taught to lie to other people on a high scale? What's Santa Claus?
Correct.
Like our system is, and many of them are like this. The medical industry is like this. You can talk to doctors who will only turn to synthetic solutions, not looking at nature. You can look at any part of society right now. Everything that has big academia and government funding behind it is a form of illusion when compared to actual reality. And there's no bigger illusion than the US stock market or any other stock market. None of them are any different. So all the stock markets themselves are based on illusion and not actual market value. Certainly not economic trends. That's
But
not priced into the market at all.
I would argue it's the opposite of because what you're doing now is you're punishing companies that pay big dividends, like
Yeah.
Zincorp, or take your pick. Everyone's calling them value traps, but that's not what they are. They're profitable businesses, right? So think about it. If you believe the one side that when you issue shares, the pass is a force to buy,
Yeah.
well then if a company pays a big dividend, well they become smaller in the index, and the pass is a force to sell. So the incentives of the system are actually opposite of what of capitalism, right? The more you lose
Yeah.
money, Carvana, whatever, Palantir, whatever, the more you
We
put
work.
shares
Yeah.
and lose money, we work. The more you're the valuable, the more the price of your stock. Because again, I believe people are conflating valuation with value.
Sure.
Um, the thing that's ironic about it is a 10-year-old could see it,
Yeah.
but a portfolio manager who's been in the business, who's been gaslighted by the Fed for 40 years, points to the price of Boeing and says, "No, Chris, you're wrong. It trades at 170 billion." But
It's
but
so
if you ask
true.
them, isn't it amazing? Well, that's the point, right? The point is that's why it was such an irony to have the dumbest kid in the class day one of college of class at community college sees it. Who here is willing to give me $150 to give you $1 for the rest of your life? Hell no, we'd all be dead by the time we broke even. He
Yep.
sees it because he hasn't been gaslighted. But ask a PhD reason Boeing's trading at this, and then they build a narrative. Think about this. The way it should work is fundamentals happen. Let's put it in the context of GameStop, right? What
Great
should happen
example.
what should happen is fundamentals. They sell games, right? All of a sudden their sales start taking off. Then the narrative builds. Then the price moves, right? Notice what happened with GameStop. The price moved right from 200 million to 20 billion in about 3 weeks. Okay. Then the narrative, well, it's a short squeeze, right? It's they're getting into NFTs, whatever it was. Then the fundamentals. But the fundamentals, when it hit 20 billion, didn't come from where you thought they were going to come from.
They were
You thought they were
reactionary.
no, you thought the fundamentals were going to come from selling games.
No, no.
The fundamentals came from selling shares.
That's right.
Because now they sell 10% of the shares and they really do have $2 billion on the balance sheet, but it didn't come from selling games, it came from selling shares, which gets back to my point that it's a financing system. It's not an investing system.
That makes perfect sense. I don't know how anyone can listen to that and argue that point.
Well, that's why once you see
I'm
it,
trying to think of a way, Chris. I'm trying to push back on you here, but that's just
correct.
overly logical, which makes it, that's going to be controversial in today's world.
Well,
Um,
it's another Orwell quote. The more a nation drifts from the truth, the more people are going to hate those who speak
those
it.
who, yeah, yep, that's right. And in the end, imagine society with just a government boot on someone's neck for all
Correct.
eternity. That's kind of where we are. They
That's
are
what.
picking winners. I mean, there are so many great companies out there. The thing I talk about in the public markets, because I'm not a big public market guy. I do private deals because I can go buy a dry cleaner for 2.5 times last year's earnings. And
Correct.
that's a big premium. I can go out and buy them in cash, 2.5 times what they made last year. But I can go buy, a publicly traded company for 58 times, and I'm buying the whole dry cleaner as
Correct.
opposed to, 0.0001% at 58 times last year's earnings. It's all an illusion. But they craft this narrative with the term the new normal. Well, this is just the
Yeah.
new normal. This is just how it's going to be moving forward. Of course, that's the way it's going to be moving forward because it's completely controlled,
But that relies on the globe continuing to buy U.S. bonds and U.S. stocks.
which is
Because again,
slowing tremendously. Yeah.
well, so the globe stopped buying U.S. bonds. It kind of flatlined in 2014. By the way, you're also noticing the countries that stopped buying U.S. bonds are now on the U.S. Hit list.
Yeah, of course.
Iran, Russia, China, right?
Venezuela.
Venezuela. So once you stopped buying U.S. bonds, now you're on the hit list because
Hmm.
you need to recycle. What you're really doing is you're funding your own enslavement.
That's right. That's right.
That's the end of the day. What we're doing.
Yeah, the average American has no idea what communism is,
Oh,
zero. And a central bank is absolutely a construct of the early stages of communism. It's been here
correct,
for 112 years. We've lived under communism where centrally planned monetary policy, monetary supply, and credit creation are in the hands of a few. That
correct,
is literally communism. And you're
correct.
right, because there's only two ways that we're invading people in the last 100 years is number one, if they stop buying our bonds, but number two, if they don't have a central bank. You can look at any major conflict. Iraq didn't have a central bank. I mean, Libya,
Yep.
Gaddafi was the worst guy in the world because he wanted no central bank, no pharmaceuticals, and he wanted to share his profits in the country with his people. So obviously he was a villain.
Well,
Venezuela, no different. I mean, that's happening. Although there is a $4 trillion cartel running that country, there definitely needs to be some liberation there. But it's the
Gaddafi
same
also
story.
Gaddafi also wanted to start a pan African currency
Of course,
that was off the dollar. So he wasn't going to last. By the way, you should look at the G7 and notice who the G7 is. Right, it's the four countries that won the war:
the
the U.S.,
winners,
the
the
U.K.,
the
France.
three losers are silent. Yeah,
Correct. So, and notice the three losers don't have nuclear weapons.
right.
So that's why I don't call it the U.S. It's the U.S. system. It's the because Japan and Germany and Italy are all under that system.
Yep.
By the way, look at the reserve currencies. It's 90% those seven countries.
Yeah.
Right. So that's why there's always a fight with Russia. Um, it's it. By the way, Orwell couldn't have explained this better. The two things that the party wanted was to silence critical thinking and
Yep.
to be able to kill 100 million people without them noticing. Right. That was kind of one of his end conclusions. And here we are with silencing people with Google and all these social medias when they're
YouTube.
back YouTube. They're exactly right. They won't let certain people speak. They don't want to see that. They don't want to see those voices. I mean, look at Luke Roman. Luke Roman's a perfect example. He is brilliant. Nicest guy
Brilliant.
in the world too, by the way. But he is brilliant, and you don't see him on mainstream. He couldn't
Ever.
explain this any better. You never see him on it. Why? Because he knows. Because he's telling you what's happening, and he's just honest with you.
Yeah. James Lavish too. Same thing. You never see him on CNBC or any of those shows because they won't toe the party line.
Nope. Because he's going to
Which
tell you what's happening.
which defines that we have a party line. And going back to the bonds, I mean, people always talk about, well, why are people buying less of our bonds? I'm like, think of it like a company. So the intro is, hey, I've got $5 trillion in forced revenue. That's a great company. I'll take my money into that.
Right.
But we're 37 to 340 trillion in debt. Do you want to lend us some money? I mean, that's kind of the argument that's made.
Who would ever buy a bond from a country with that can't pay them back in real terms that's monetizing their debt? If you saw Zimbabwe with that kind of thing, you'd say, "Oh my God, let's go buy these Zimbabwe bonds." So it's a certainty that that system's going to crash.
And then
By the way,
Zimbabwe thought they'd get slick and say, well, our Zimbabwe dollars are backed by gold. And that's down 74% now from their original launch. No one's going to believe this. Like, I always hear the gold, we need to go to a gold standard. No one's going to buy it. Like, you're going to need 3 generations of brainwashing when this is all said and done to believe that your government's actually going to have real gold that backs your money that's truly redeemable for gold. I think that era and time is over. And 4 years ago, I was a huge advocate. Let's get on the gold standard and fix this all. I don't think that's it. I think it's Bitcoin and the mechanics of Bitcoin that solve the currency issues long term. What do you think about that?
So there's no government in the world that's going to voluntarily go
Of
back on a gold
course.
standard or a Bitcoin. It's never going to happen, right?
Of course.
The only time a gold standard would come back is after the crash,
Yes.
right? And they can, and again, it can be any neutral reserve asset. It can be Bitcoin, it can be gold, it can be silver, it can be a combination, it can be commodities. There is a continuum on which commodity is has more stock to flow,
Yep.
right? So there's very little flow in terms of use of gold, and that's why gold is money.
Mhm.
As J.P. Morgan says, gold is money, everything else is credit.
Yep.
So it's stock to flow. Whereas if you go on the other side of commodities, you can look at the stock of oil versus the flow of oil. There's very little stock, and there's a ton of. That
Yep.
means it's more commodity. So on that continuum of commodities, there's gold on one side, there's oil on the other side, and the more stock to flow, the more money, the less stock to flow, the more it's commodity.
And I wasn't even born when we went to a petrodollar. Was there any friction in did the news even challenge this move? I mean, has it always been this way where they're just kind of like, well, here's what we're doing and we're going to make it sound great to all of you. What was that like back then? I mean, that's quite a ways ago. I don't know if
I, was,
I don't even know if you were around back then, to be
I
honest.
know about it, but again, so what I remember from it was so I was born in 1968. So the petrodollar established
You were a
was
baby.
established-
Yeah.
exactly. So it was established in 1973. What I do remember is the lines of gas.
In the
Right,
late 70s.
we would wait hours to get gas. Right, you just sit in a line just waiting for gas. What
Just
was really
burning gas, waiting to get gas.
correct. And what was really happening is I think the Saudis just they said, hey, we're not going to sell it to, if you're going to print money from thin air, we're not going to sell you the oil. So there was a shortage. I mean, shortages shouldn't happen if the price is the right? So
That's
the
right.
price was wrong. So they weren't willing to accept it for printed money. They
My, how
cut.
they changed their tune.
Correct. It's all
Yeah.
narrative. The whole thing is narrative. As you know, the whole thing is a gaslighting exercise, right? They've been lying to me. I gotta imagine that that Kissinger is laughing in his grave and by saying, "Hey, we've convinced the entire world to accept our debt, and we called it risk free." Oh my
Yeah.
God, right? They believe it's risk free. They actually believe it's risk free. Oh my God, we have $37 trillion in debt.
We did it, guys. We did it.
So now we can print money from thin air, and for their goods. The rest of the world, I mean, I can't believe it took them this long to figure out. All we do is print money, and then you send us goods. Is that a good deal? Can we shake on that?
Yeah, no. How do you retort to there's going to be an innumerous amount of people who watch this or watch clips of it and say these guys are doomers, right? That's the new retarded name for people that are
100%.
acknowledging reality. How do you retort to that?
Easy. So this current system is broken. It's misallocating resources. It's protecting the rich at the expense of the poor. So if the currency collapses to return to capitalism, the global economy will boom. We'll start to efficiently allocate scarce resources again. Right? It turns into a real economy again. You're not going to pour money into Tesla. I mean, look at Tesla, Carvana. Like Tesla's trading at $1.2 trillion. Okay, that's more than every other car company in the world combined. Right? Last quarter they grew at negative 19%.
Yeah.
Well, why did the stock not fall? Because the market doesn't read the news. It's the ecosystem change. It's all passive and quant, right? So you can read it. You can read it once you understand that markets aren't reading the news. You are holding a crystal ball because you read the news.
Right.
You can see what's happening. You just have to understand the scoreboard's broken, right? In Money Game, we say the Fed's supposed to be like a referee in a football game. No one's supposed to notice them.
That's correct.
But now they flipped the field 90 degrees and broke the scoreboard. So if you know the scoreboard's broken, buy the diamonds, Bitcoin, silver, gold, copper. Ignore price. Like if you knew that prices were being set by a 4-year-old, would you still believe that those prices make sense, or would you just ignore the scoreboard?
Good point.
Right. So
Right.
ignore the scoreboard. You know how this ends, and just go buy the things that you know are worth something.
How long do you think all this takes to unwind? I mean, first of all, I don't think anyone can listen to this logic and debate it. Like there's no debate about passive followed by quant or algorithmic. So there's really no debate about that. Everything is kind of set in stone. So if I'm selling stock, there's automatic buyers and there's buyers behind those buyers who are following those buyers. And then there are tertiary and fourth and fifth level algorithms that are following the followers.
Correct.
So if we're just in this Pied Piper environment, which is obviously true, I mean, there's not
Correct.
a single person. Explain to me how Nvidia is worth so much with their sales being so low, right? These are questions that when I was a kid were oftentimes asked, right?
Yeah.
The people would say, well, how can GE be worth this much when their sales are only X amount? And you'd explain premium and there's not enough stock out there in the market or whatever the excuse was at the time. But the reality is that the entire time that we've gone through this has been right in front of our face, and yet people still fail to acknowledge it, primarily because the TradFi ecosystem is incentivized by this deceptive system. They
Correct.
understand the deception. They don't care about the deception. They just care about the rip they make on every product sold. So what is the timeline? I mean, I have never seen more people in my life questioning the Federal Reserve than I do today. So
Correct.
the awareness of this is growing out there. But does that mean it'll change anything at all? Like just because people know about a scam doesn't mean they don't keep participating in it, because everyone who knows about it continues to use dollars.
So again, so um, so the end result of this, if you look at any stock, so here's another thing probably with money game. So the crises keep getting bigger, right? 2007 we had the financial crisis. What this is a sovereign debt crisis, right?
Yeah.
During a sovereign debt crisis, government manipulates markets and sends stocks up, not down.
Yeah,
Right?
distractionary.
Well, it's because they're manipulating interest rates, right?
Sure.
So during look at Venezuela with their currency crash. What happened to this Venezuelan stocks as the currency crashed? Went up. What happened in Egypt? Stocks went up in local currency terms. In Argentina, they went up in local currency terms. So if you look out your window right now and saw thousands of gazelles, would you say to yourself, the ecosystem's flourishing? Or would you say there's no lions left?
There's no lines left. There's no balance in the ecosystem.
Correct. And so every time you see the stocks go up, you should be saying, "Oh my God, the ecosystem's broken." It's kind of like a tidal wave. It's kind of like saying, "Oh my God, hey, look, the ecosystem's broken. The waves are getting sucked out. Let's go play in the beach."
Yeah.
So the end result of this is not is during a sovereign debt crisis, stocks don't go down. Everyone's expecting the stocks to go now. Now the other thing I would have you look at the S&P versus gold.
Yeah.
So
I have.
put it in gold terms, right? The stock prices is falling,
That's
but
right.
in local currency terms, this is illusion that stocks are going up because in local, but what's really happening is the currency is falling,
Hmm.
right? So you're actually losing money. So you actually have to stop measuring things. I believe that the world's going to shift from thinking in terms of everything priced in dollars to everything priced in Bitcoin or gold.
Or both. Yeah, I
Or
agree.
both. And it can be
Yeah.
take your pick. Now, I would argue you can argue that Bitcoin will go up more. You certainly could.
Sure.
Bitcoin's only $4 trillion versus 300.
2.3. 2.3.
Is that what it is? Right.
Yeah. The whole crypto market's 4 trillion, but Bitcoin's 2.3. Yeah.
Correct.
Small.
Correct. And you look at those other Bitcoins like Fartcoin. What's the value of Fartcoin? I think we all
There's
know,
none.
right?
Yeah.
No, I know, but it trades at 1.2 trillion. And the efficient market thesis. Everyone's sitting there going, well, it must be worth 1.2 because that's what it's trading at. Think how naive that is.
The naivete in the market is rampant. Even with the most seasoned, actually, the more seasoned someone is, the more excuses they give to an inefficient market.
Because they're the ones that's the irony. The 10-year-old can see it. The first year student community college can see it, but a guy all these hedge fund managers don't see it. That's the thing that blows your mind, right? These brilliant guys. What's his name? I can't remember his name now. Any of these, Bill Ackman.
Yeah.
Right? All these companies, they're trying to explain why the markets are pricing Chipotle or a Shake Shack. Shake Shack trades at 400 times earnings.
Yes.
So what does Shake Shack? They made last year they made 20 million. Trades at 6 billion. Okay, what do? They flip hamburgers.
Yeah.
This isn't complicated. Why did it go up so much? Again, my opinion, because they issue shares because they need to finance themselves. So
Sure.
the more the companies that are irresponsible, the more the stock goes up. Tesla has gone up so much because they are irresponsible. Think about Tesla was about to go bankrupt, I don't know, 6 years ago. And Elon Musk even talks about it. And she said, we were about to go bankrupt, so we issued shares. Okay. Well, in my thesis, when you issue shares, market cap goes up, right? Then it went up so much that he's like, hey, I might as well get some more shares, right?
Right.
So I'm going to issue more shares. Stock pops again. Then they decide to split their shares. Split count. We're going to split in half now. Stock goes up. I believe it wasn't because of EVs that it was going up. It's because they were being irresponsible.
Hmm.
Isn't that
The
crazy?
system does, all of our systems in this country do reward irresponsibility, right? You
Correct.
look at Washington, D.C., like the worse congressman you are for your
Correct.
constituency, the more you'll stay in office. It's just,
Correct.
so how is Shake Shack? This is a great example. $20 million revenue company worth $6 billion. Were they just selected on high to be in this position? Because there obviously is market demand for them.
No,
But
there's
how did
no.
they get to this point?
So there's that. That's the point. Is there's no market demand, right? In the way you'd measure
No,
market
there's market
demand.
demand. They're selling shares that people are buying,
Oh,
whether it's passive or
hold
sitting
on,
in
hold on.
line. There's demand.
You just said that you said they're selling shares that people are buying,
Yeah. Oh, no. Well,
but it's, but it's
people's
not
money are buying, right?
correct. But it's not people.
No,
There's
correct.
no
No,
one
no. Well
actively
said.
making a decision, right? There's no one actually. So that's what everyone says. It's people buying. It's not people buying. It's machines, right? So
Spending people's money. So yeah, that's a good
well,
distinction.
but it's being done mechanically,
Right.
not an active decision. Anyone would look at their financials and say their profit was 20 million. By the way, if you look at their same store sales, when you said there's demand, same store sales for hamburgers for Shake Shack is negative. That
Hmm.
means there's no demand for no more stores, right? Because they're not growing the stores they have. If you showed me a company with same store sales of 10% growth, I'd say, well, seems like everyone wants burgers, right? Let's produce more stores. But that's not what's happening. The same store sales are negative,
Valid point.
right? All they're doing is growing their number of they're growing their shares, they're growing their units, but they're misallocating resources, which comes back to there's quotes from von Mises, the old economist, who basically says that um, all of he's basically saying that the entire system started to misallocate resources because it was diluted by the belief that markets were efficient, and all that was happening is they were manipulating interest rates. And so there was delusion that that we're going to make a profit on this, but there is no profit to be made. There's no demand for these products,
It's
right?
illusory.
It's illusory, right? So we can build out all these Shake Shacks, but none of the Shake Shacks make money, right? Again, come
True.
back to money game. Why does your if you notice that
Kind of like games. I mean, GameStop's a perfect example because
correct,
a primary function of their revenue, at least for a period of time, was used video games, which have, a $3 to $5 markup or maybe a $30 markup on the right game. These are very small profit margins on these types of things. Yet it's in the billions of dollars in valuation because of a stock game.
well, then
Everything is a stock game.
I mean, GameStop loses money.
Oh, a ton of money. Yeah. I mean, even just looking at their individual sale, it's one of the worst products in the world. Nobody buys video games in a store anymore. They order them
Correct.
online. They just download them. But yet this is worth billions of dollars.
So it's not worth billions of dollars. It's
Correct.
trading at billions of dollars. Don't conflate valuation with value. The value is zero,
That's right.
right? The valuation is whatever,
Negative.
10 billion. Correct.
Hmm.
So that's the point. The more the system rewards companies that lose money, the more it misallocates resources, the slower the growth in the real economy. By the way, you should notice all the animals in Money Game, right? There's crypto is a cheetah coin.
Mhm.
The algorithms. Gardner says the Reddit guys finally figured out how to trigger the stampede of algorithms. Wildebeest. That's algorithms, right? The lions. The lions have been eaten, right? You see a rhino coin, right? It's not quite a dinosaur yet, right? You'll see that in there. The only animal you will never see in Money Game is the elephant, because it's the elephant in the room. It's the real economy. And it's our lead character, right? It's James. So James is the real economy. So if you saw that poster, it's behind Gardner
Mhm.
in the classroom scenes is the five animals in the ecosystem, right? So we tried to incorporate all five of the animals into the ecosystem because we're trying to show you, and it's so hard to do because we're trying to explain very complex things in very layman's terms,
Yes.
so people can understand what's happening. The biggest point in Money Game, when the Fed intervened in bond markets, they broke the ecosystem of capitalism. It's all passive and quant. Nobody's thinking anymore. And by the way, if you hang out to the very end of Money Game after the credits, you're going to see if there's first of all there's a lion. Who's the lion? The lion is you. Think. There's no thinkers left. There's no one thinking anymore, right? So the lion is you coming back. Imagine reintroducing a herd of lions back into the savannah after the gazelle population exploded by 10x. The lions would make a killing. Right. So, and then at the end, you get the closing quote of Money Game. If passive ever gets bigger than active, there'll be chaos and catastrophe. Our markets will fail. That's what's happening. Our markets are failing. And by the way, who said that? Jack Bogle, founder of Passive, Vanguard.
Of course.
2017.
I'm going to try something here, Chris. I'm going to go on Grok and ask it, this is just proving something, is the stock market an illusion? Let's see what it says here. The stock market isn't an illusion, but it can feel like one when you dig into its mechanics. It's a real system where shares of companies are traded, driven by supply, demand, and investor sentiment. Prices reflect collective beliefs about a company's future value, but those beliefs can be swayed by hype, fear, or misinformation, making it seem like a house of mirrors at times. Bubbles, crashes, and irrational exuberance show how perception can outpace reality. Yet over time, the market tends to align with actual economic fundamentals, though not without wild swings. If you're asking whether it's all smoke and mirrors, the answer is no. But it's not a crystal clear reflection of the truth either. It's a mix of hard data and human psychology, and navigating it requires a sharp eye for both. Well, this is an interesting thing to think about because they will use that because you said people are losing critical thinking. And the most common retort to anything I see on Twitter is, at Grok, is this true? Right? So it's already being aligned to say, no, it's not true. Everything's totally cool. It's a great reflection of how the world works.
So, so what I did was I went into Grok and I said, if the market was 100% passive, would that reward companies that need financing over companies that make profit? And would actually punish companies that make profit? And it basically came back and said, yes, if the market was 100% passive, it would become mechanical, and it would actually reward companies because they have to rebalance at the X date, right? So I believe there are no people left in markets, right? The lions have been eaten. I believe it is mechanical now. It's kind of like the thing.
Hard to argue that.
It's kind of like the scene from Star Wars, right? It's Obi-Wan Kenobi. I felt a great disturbance in the force, as if millions of voices suddenly cried out in terror and were suddenly silenced. I fear something terrible has happened. That's what I think has happened, is that the entire world has been silenced. The reason that VIX is so low, the reason the market doesn't respond to anything, because there's no humans thinking. That's a big topic.
That's a very big topic. That is a very big topic. Then you have a completely controlled fishbowl.
Correct. So I believe what you saw when the Fed intervened was a coup for the financial system.
I think that happened in 1913, but that's my opinion. I think
yes. I think it became more escalated in 2007, 2008. BlackRock, look at BlackRock, started in what, 2000? I mean, they were a nothing firm in 2004.
Spin out from Blackstone.
Correct. By 2007, they were big, and now they're the biggest. So just think about that. If 80% of the market is passive and quant, and it's higher than that. It's probably 90. Think about that. Capitalism by definition is millions of independent thinkers, right? If BlackRock, State Street, Fidelity, and Vanguard control 80% of the market, it's not capitalism anymore.
That's right.
Right.
And how much do they control by vote by proxy? That's the real number.
All of it.
Almost all of it.
Well, so if a company like Boeing says, hey, I want more cash, all they need to do is say, I need $10 billion. They go to the passives. There's no one voting. It's just, I need $10 billion. Oh, here you go.
Just an ATM machine.
It's an ATM machine. That's why I say you're not investing in these companies. You're providing the financing.
Even though you're being diluted every time it happens. And that's the worst part, is they're issuing more shares.
So, but you know the value. So it's like buying my thing here, like a little whatever.
You still have a highlighter.
highlights. So I'm buying my highlighter for $30 million.
Right.
Oh, hey, it's $30 million. We need more cash. Okay, sell 10%. Now you've got $3 million for my highlighter, right? So that's what's happening. You know the value of Boeing. You know the value of Palantir. You know, so but finance professionals have divorced themselves from that, from valuations. So by the way, there are no financial professionals. There's no human setting prices.
No.
Whenever people say it's people, I always stop them and say it's not people anymore. It's machines.
Mm-hmm.
Because the machines won the machines won because they have no morals. It's moral hazard, right? They didn't win because they were smarter. They didn't win because it's AI. It's just mechanical, right? When a company issues shares, it becomes bigger in the index and it goes up because there's no one pricing the shares, no one diluting them, right? No one saying, well, you diluted me, therefore I'm only going to pay this. No one. That's why you have companies like Palantir trading at 120 times sales. No human would buy that. So who's buying it? Everyone in their passive and quant funds. And by the way, think about track records. Everyone's using track records as a hey, look how smart Roaring Kitty from GameStop is. Oh my God, how smart he was! He bought it at 200 million. Now it's 20 billion. He's brilliant. So that's who's managing your money today. It's Roaring Kitty.
Roaring Kitty.
It's ARK, right? It's Kathy Wood from ARK. Why has Kathy Wood been successful? Because she doesn't use math. Because she's naive, right? So she's notice all the companies she buys lose money.
All of them.
Correct. So why did she win? Why is she the 4% of fund managers that beat the index? Because everything disconnected from fundamentals, and the naive won. Right. Same reason that Elon Musk, because he's irresponsible, trades at more than every other car company combined.
Combined.
If you look at Stellantis's profit and revenue and revenue growth, you'll see that Stellantis has made way more money than Tesla over the last 10 years.
Yep.
Right. Stellantis trades at 25 billion. It has, if you include all their investments, it's probably about $50 billion in cash and investments on their balance sheet. So it trades at half its value. Why? Because they were profitable.
It's just psychotic to even think that, but it's absolutely the reality. I mean, you're speaking absolute truth, 100%. Highly recommend watching Money Game, by the way. I can't wait to finish it. Wish I had more time. Just family stuff got in the way of the weekend. Chris, where does this all go? So how does this end, or does this end?
So the more so I think the next time the Fed prints, right? The next time the Fed steps in, this is my opinion. I'm never going to be able to prove anything in the future because I don't know.
Sure.
Right? I'm just guessing. I believe the next time the Fed prints, it's gonna make everyone believe that there's no way out of this. Right? It's kind of like the book called "Dying of Money" by Genzo Parsons. And he talks about the Great German Inflation, and he basically says he's talking about the Weimar Republic, and there was this path. What he says is the only thing that kept Germany together was this pathological belief in the strength of the mark.
Right.
We're seeing the exact same pathological belief in the value of the dollar. We know the value is worthless. We know they can't pay it back, right? And when does it? He's like, you never know. And then it was nothing in particular changed except some general psychological awareness that Germany was not going to back its money. Right. And I believe the next time the Fed steps in and starts printing money, it's the second biggest quote in the movie. Professor Gardner will raise the he raises the book The Efficient Market Thesis. He laughs. And then he says the most underused books in finance are history books. Then he says von Havenstein, the head of the German bank, had a choice: print the money or trigger the revolution. So if they don't print the money, there's going to be everything collapses, right? So they're going to be forced to print. When they print, I think it's going to make everyone say, hey, oh my God, they're not going to back their money anymore. And then all of a sudden you're going to see a crash of the dollar. By the way, we're already seeing the crash of the dollar. Right? Silver's gone from $12 to $40. Gold has gone from 1,100 to 36.
36, yeah.
Right. So we're already seeing it. There's a a chart.
Bitcoin went from 9,000 to 120,000 in the same period of time as gold.
Correct. There's a
Yeah.
chart from the Weimar Republic of gold.
Yeah.
And during that chart, I can't remember whose chart it was, but during the Weimar Republic, the biggest hyperinflation in history, there were 5 times that gold went up and then got hammered, and it went up, then it got hammered, then it got, because what you're seeing is a battle between printing and the Fed stepping in, print or raising interest rates, right? But there were 5 times you could, if you leveraged your gold, there were 5 times you could have lost all your money.
Sure.
So I would argue that we should do is don't leverage. You
I
know
agree.
you know the value, right? All you need to do is get to the end, and I believe Bitcoin is heading to infinite in dollar terms. So, and the other thing is, think about this. I love these people that put price targets on these things. Once you put a price target on silver and gold in dollar terms, it proves to me that you don't know what you own.
Yeah.
So think about in the Weimar Republic, if you bought silver at or call it gold. Let's say you bought gold at $1,000, and at the end of the Weimar, you sold it at 50,000. Now you have a wheelbarrow full of marks.
Yep.
You go to the grocery store. You run into you grab a bunch of your marks.
Loaf of bread.
You come out and your wheelbarrow's gone.
Yeah.
Right. So you didn't understand what you owned. So you could have. So at any point when you sell your gold or Bitcoin and put it into cash, you didn't understand what you owned. You lost
I agree.
everything at the end.
I agree. And the interesting thing is that the comparisons of Weimar Republic and Germany and America are identical.
Yes.
From a societal standpoint,
Correct.
from a government overreach standpoint,
Correct.
degeneration of film art, everything that you can see, everything is degenerated. Everything has gotten very demonic, just like it was back then. But eventually, what happened was, and like him or not like him, historically, this is proven to be accurate. Hitler took power. He arrested a Rothschild. He kicked out the central bank, and he backed his currency by labor, which
Correct.
sounds a lot like proof of work in Bitcoin. And I bring up those two. That is a solution, is to give your currency value, applicable value to the people who use it. And right now we have no value. The value we have is centrally planned and governmentally dictated.
Correct.
That's where we are. The actual value of any money, not just the US dollar, just happens to be the biggest. Any currency around the world is by dictate. It is fiat. It is by mandate, by decree that you must use it. And we will centrally plan the value of it to determine your best interest, which is another way of saying we're the government. We're here to help.
100%. You're actually seeing the government stop buying. The government themselves aren't buying bonds anymore.
Right.
Right. For a while they were buying bonds. Now they're buying intel. They're buying rare earths. They're buying all these. Well, wait a sec. I thought that the U.S. Treasury was good as gold. Well, then why are you buying rare earths or intel or all these other things? Because they're telling you it's not good as gold.
Yep.
Right. So they know that it's worthless. So they're going to continue to try to lie to you until the very end, until the currency crashes. I believe it's crashing. Like, I think it's already crashing. So so you're not. I mean, the end result of this is that people are going to be pricing things in gold or Bitcoin and not in dollars anymore. I think the dollar loses global reserve status. I think next time they print, the dollar loses global reserve status. It's already going to happen. It's inevitable. I actually think that the 2022, when the U.S. stole Russian reserves, is going to go down in history as the same as 1913, 1933 when FDR stole gold reserves, in 1970. It's a currency shift.
The death sentence. When you start weaponizing the stuff we did in 21 and 22, is a death sentence for a global reserve currency.
Correct.
It's a death sentence, and no one's gonna. There'll be people who are like, no, it'll just go on for. Like, listen, this fraud and manipulation could continue for the rest of my lifetime. I just don't see that happening.
I don't think so. I think you got 12 months is what I think. I have no idea. I don't know anything more than anyone else. But I see the BRICS organizing against it. I see that the debt's unpayable. I see the tariffs. By the way, the other thing I can drive everything negative, because if you turn that capital account, the net international investment position, it reverses. By the way, if you put tariffs up on everyone, that net international investment is going to reverse,
Yeah.
right? So if that reverses, now you've got capital account heading out, and you've had negative current account. And again, the governor that controls imbalances in the economy is the currency, right? By the way, you should also notice the currency is falling,
Yeah.
right? Even forget about versus gold or Bitcoin, also versus in DXY.
Yeah.
At one point it was 108,
Just
now
the
it's
basket. Yeah.
96. Correct. By the
Yeah.
way,
Dropped 14% this year, 12.5 to 14% this year, which means that your savings account at 4% is actually like -10 or
correct.
-8.
Who would ever buy a bond with a negative yield from a country that's monetizing debt?
That's what I continue to, we keep hearing that. That literally is the stablecoin genius act, right? These guys are going to be vacuuming up short-term treasuries as part of the process. But those treasuries, Trump's talking about a 300 basis point drop, which puts you at negative interest, especially in real terms. You're really losing money day by day. Who is going to buy that is the question without a gun to their head,
Correct.
or without a financial incentive. I don't even know what the incentive would be for a stablecoin provider at that point. They're not even earning any interest. All they're doing is moving fake money.
Right. And
It's
the
like, where does
same,
that go? Where does that go, Chris? So this whole stablecoin thing to me, of course, there's propagandists out there like, this is the greatest thing that ever. You can have your point of view all you like. I shouldn't call you a propagandist because you may not be. But from my perspective, I'm just looking at my family, my future, and saying I want sound assets. I totally get that. I mean, all my money's in gold, silver, Bitcoin. I mean, little scattered investments here or there,
yep.
highly concentrated in that area because I've been seeing this. Now they're calling it a commodity super cycle, but that's not the reality. The reality is it's a dollar decline, massive
Correct.
dollar decline.
Correct.
So it's
Think about
these marketing terms that we use around it.
100%. Think about marketing terms. They call it growth and value, right?
Right.
Growth isn't growth. Growth is companies that need financing. That's
Right.
zombie course, right? So I proved to you earlier with the sustainable growth formula that these companies aren't sustainably growing, right? Because they don't make any profit.
Correct.
So that whole thing by itself, growth is not growth. It's zombie corpse, right? I was a growth
All a
fund.
scam.
Right, it's a scam, right? So change your thinking from I own growth stocks to I own zombie corps, because that's what that is, right? By the way, the whole diversification thing. If you think about every financial advisor is going to tell you to diversify your assets, right? Because it's a financing system.
Right.
They want you to finance the entire system.
That's a very good point. That is the ultimate marketing hook. Diversify
Correct.
your holdings into this basket that I have deemed to be worthy.
Correct. So they're not telling you to pick great stocks and buy things that are undervalued. They're telling you to diversify, right, into everything. There's no capitalist wants to diversify. I want a few great businesses,
Right.
right? I don't want to diversify into everything.
Or just one I'm fully convicted on, right? Like let it ride. There are people like that. There are certainly, yeah.
Sure. I mean, you can do it, but to diversify across 500 companies or 3,000 companies, no, thank you.
You're taking on every loser. You're
correct.
taking on every loser and
Well,
you're negating your wins. It never made a whole lot of sense. I
you
used
can
to be in the
also,
business too. So
well, you can
uh,
also look at companies and say Boeing has not made a profit in 10 years. Why am I betting on this? Why am
with
I
a
paying 100? I know the value at zero,
and
right?
and you got to remember they have a basic monopoly on air travel. Like Boeing, they
Correct.
have a monopoly on plane sales to commercial airlines. They have a monopoly and they still don't make money.
Don't make money.
This is such a good interview because I think it's very simple to understand. And if you guys don't understand, reach out to me or reach out to Chris on social media. We'll be happy to walk you through this. This is just the way you're thinking is stuff that I've known. I don't think I've been able to articulate
Right.
as elegantly as you have here today. But let's just look at the next 12 months. Like you said, you think we're going to be at a collapse in 12 months. I don't disagree. I don't put timelines in anything.
Sure.
I think eventually the scam ends. I mean, all scams end, and they end really horribly, by the way. They don't ever end softly. But let's say the next 12 months, we know we're going to print money. We know we're going to force rate drops at least by March of next year, May or March, whenever the new Fed chair comes in. We know that our Fed is now fully political, not an observer, not a referee. We know that. If you had the choice, because there's going to be we also since we've all lived in this scam system since the moment we were born, where we're paying 40% of our income to breathe air, which is by itself stupid.
Correct.
Or capital gains is the largest source of income for the government, which makes no sense. Like if I lose all my money in an investment, I can write off $3,000. But if I win $10 million, you get $2 million for doing what?
Right.
I took all the risk. The government makes all the profits. A
Right.
total scam. But what happens in the next 12 months? We have printing, we have lower interest rates. We know more companies are going to be issuing shares. Would you
100%.
put your money partially in equities for a period of time to go through that bull run, or which is a manufactured bull run 100%? Or would you stay the path in like gold, silver, Bitcoin? Where are you going to be going in that 12-month period?
Okay, so like we say in money games, stocks, bonds, and cash are massive bubbles, but commodities are trading 120-year low. Okay, here's the thing: um, once you understand markets are broken, you're holding a crystal ball, right?
Mhm.
I think the worst place, the running to cash during a sovereign debt crisis is like running into the fire without kerosene, right? So it's the last place you want to go is cash.
Absolutely.
So that's what's interesting too. It's also why Professor Gardner says the most underused books in finance are history books because it's before any of us were born, right? Even our smartest investors. Look where Warren Buffett is putting his money, cash. So imagine Warren Buffett running to chase cash his entire life and didn't understand what he owned,
Hmm.
right? So if we hit a sovereign debt crisis, all that money he has, 70% of his assets go to zero.
Yeah.
He's trusting. It reminds me of a scene from Animal House. Have you ever heard of Animal House with John Belushi?
Of course, yeah.
You fucked up. You trusted us,
Yeah.
right?
So true. So true.
He's trusting that the government is worth something.
That the
He's
scam will
putting
continue.
But understand why? Because he never lived through a sovereign debt crisis. That's why the most underused books in finance are history books, because you
Hmm.
actually have to look at cycles from years ago. Our smartest and oldest investors, he's 90 years old. He never lived a sovereign debt crisis. His father did. His father understood the value of gold. He talked about gold all the time, but he didn't. Right. So he's got all his money in cash at a time that is the worst. So where do I put my money? I put it. So, I mean, you can look at gold stocks right now trading at 7 times earnings.
Yeah.
Right? You can why? Because the markets aren't reading the news. Right? They're not in the index. So you can look at copper companies, BHP. You can look at Zimcorp trading at half times trailing free cash flow.
Some silver miners, some gold miners.
Silver
Yeah.
miners, gold miners, copper miners, shipping companies. Stellantis is a real asset.
Yeah. I think
Right?
copper miners are going to do incredible. I mean, we
Well,
need more copper than we can possibly produce right now.
well, I mean, there you go. I mean, capitalism requires risk to allocate scarce resources. If you remove risk, the entire system will be competing for scarce water resources and die off.
Yep.
Right. So that's the super cycle we're talking about. Right. Is that, and it's not driven by the value of coppers going up. It's that the currency's falling.
Right.
Right. And by the way, I think these gold prices have been manipulated by paper contracts.
1,000%.
Right. So
Any discussion around that is the most simpleton thing that anybody disagreeing that paper markets don't manipulate the price of a physical commodity is a fool.
and that's why we say the scoreboard's broken. So it's not only broken on bonds and stocks. It's also broken because commodity prices. I mean, I would argue that gold is the master commodity.
Sure.
Right? If the gold price goes up, you're going to see copper prices going up. And the only one that I was wrong. I would have told you that oil would go up too, but it didn't because that's tied to the dollar.
Yep.
Right. So if you look at the gold to oil ratio, the gold to oil ratio is through the moon. Because oil prices are being held back by the petrodollar system.
1,000%. Yeah,
Right?
former oil and gas guy here. Like I called for 150, 180 barrel
Correct.
oil 3 years ago, and it never even got close.
Correct. It's because and I would have argued the same thing at that time. I would have argued all of it's going to go up, right?
It was
Because
logical. Yeah.
But I was wrong, right? It turns out oil didn't go up,
No.
but gold did, copper did, everything else, palladium, platinum, right? All of those are flying, but oil didn't yet. I think oil eventually will, because I think eventually the currency crashes, right? But I would argue also the gold to oil ratio will go up, not down.
I agree on that. Yeah, I can see that.
Right.
When did this revelation occur to you? That's kind of the thing I'm wondering. A couple of years ago, year and a half ago, you made a film, so obviously you've had time to plan that, script it, write it, film it, and produce it.
So the first thing that made everything click was the repo market spike when interest rates went from 1% to 10%. Right. That's when I wrote
Overnight.
Correct. And that was in, I don't know, it was called September of 2019. I wrote the white paper. I delivered the white paper February of 2020, right before COVID. So I was like, okay, this doesn't. As a hedge fund manager, I was trying to write something up, saying, how do all these things not make sense? How is there no crowding out? How does printing money from thin air, right? All these things that don't make sense. China builds 100 cities the size of San Francisco, right?
That nobody lives in.
That nobody lives in, and the price of cement goes down.
Right.
How can that be? Right. I mean, I remember reading a book called Peak Trump by David Stockman. And he was saying that China used more cement in 3 years than the U.S. did during the Industrial Revolution.
That's right.
And the stock and cement prices went down. How can that be? So what China did was they used this cheap money to build cities where nobody lives, whereas the U.S. Used it to buy BMWs and Canadian Goose.
Right.
Right. So we were concerned. Like, look at all the imbalances in the U.S. economy.
And the Chinese use that as a way to bolster GDP. Look at all the building we're doing right now. No one lives there. No one's ever going to buy them. No one really owns them. They just built the cities, so they have this expenditure that could increase GDP.
They modernized in 20. So they went into the World Trade Organization in 2001. And then what they did over the next 20 years is build a modern economy on cheap. On everything was cheap. Hey, everything's free. I can go buy all the cement in the world. Go build cities.
Yeah.
At the end, what's going to happen is the currency is going to crash. The U.S. currency is going to crash. The Chinese currency is going to crash. And now what they have is a modernized system. New rail, new ports. Yeah. Like nine of the 10 biggest ports in the world are in China. If you look at their shipping, their ships, some of their ships can be 10x the size of our ships.
Yep.
They're just massive. And the scale of it is massive. So what they did is they used cheap financing to modernize the entire economy. When have you ever seen an economy over 20 years modernized like they did?
Never.
In 2000, right? In 2001 or 2000, the average the GDP in China was 1,000 per capita. Now it's probably 15,000.
Yeah.
Never seen an economy. They did it on the back of cheap money. At the end, what's going to happen is the currency crashes, but the buildings remain. There's no payback, right? So that's what happens, right? So the U.S. currency, the U.S. dollar collapses, the debt system collapses, but now they have modern rail, modern ports, modern everything. By the way, you should also notice that China isn't buying U.S. treasures anymore.
Yep.
They're buying copper mines.
They're sellers, net sellers now.
Correct. But look what they're doing with their money. They're not recycling they're not doing the petrodollar, recycle it back into U.S. treasuries. By the way, neither is the U.S. They're taking it and doing 20-year LNG agreements.
Yep.
Right. With Bahrain or whatever it is. Right.
Which is a sign of good. That's at least there's something substantive there.
Well, that's why they're doing it. So
right.
They know the value that they know the U.S. can't pay them back in real terms. I saw a interview with Putin. He said on average of the last 10 years, the U.S. dollars declined by 8% a year.
Yep.
I think that's generous.
That's optimistic. Yeah.
Correct. And he's saying why would you put your money in their bonds? Right. So so I think the globe is starting to see the exact same thing. And so rather than recycle it, which now the U.S. is putting a gun to their heads, no, you got to recycle it back into our stuff. Right.
True.
You got to finance your own enslavement. Right. So
and you've got to send us money to build your companies here.
Correct. Because we need our hamburger companies like Shake Shack to trade at not 400 times earnings, but 600 times earnings.
Yeah.
They need the cash flow because you should just notice that everything is working in reverse. And once you see everything is working in reverse, you realize that this is completely unsustainable.
It's amazing, though. I encounter 10 people a day that are like, no, that's just a doomer perspective. Everything's going to be fine. We've done this before. We've never done this before. Conditions have never been like this before in this country. They have been like this before in, post-French Revolution. You can look at Wiemar, Germany. You can look at Argentina. These conditions, you can look at Venezuela. These conditions have existed. They have not existed here yet.
Correct.
But math is math and history is history, and they both rhyme and repeat.
Correct.
And I think that we are eventually, I don't know when, you say 12 months. I actually think that's probably a decent prediction. But you don't know, and I don't know. Nobody knows. But eventually, the songs, the piano stops playing at some point. Like the Ponzi can only go on for so long. The scam can only be pulled over the walls of people's eyes for so long. And there are more people every day who are questioning this system. And I
Correct.
think some of the best, some of the things that are happening right now are the biggest wake ups. Like, oh, interest rates went down, everyone cheered, mortgage rates went up.
Right.
Right? Like people are starting to figure out how can that happen? Oh, that's the 30-year bond. But now that you start seeing this scam unravel in front of people, I think you're right. It's either make a change or you have a revolution. Like a change will be made no matter what. It just depends on who's the one who's actually pushing the button for change to occur.
Correct. I mean, here's a quote from Genzo Parsons, "Dying of Money." Lenin is said to have declared the best way to destroy a capitalist system is to debauch the currency. By a continuing process of inflation, governments can confiscate secretly and unobserved an important part of a wealth of citizens. By this method, they can not only confiscate but confiscate arbitrarily. Right? When money was so easy to come by, no one took less care to obtain real value for it.
Yeah.
Right. So you're seeing all these things were the exact same. There was no unemployment, but there was vast spurious unemployment, activity in unproductive and useless pursuits. Right. It's all happening again. Speculation alone, while not adding anything to Germany's wealth, became one of the largest activities. The fever to join in and make a quick mark infected nearly all asset classes and also all classes of society. And the effort expanded in simply buying and selling. The paper titles to wealth was enormous, right? So what you're basically seeing is you're seeing a replay of Wiemar, right?
It's a
By the
complete
way,
replay. Yeah, especially like looking for quick profits. Like that's why meme coins exist. That is literally the function of a meme coin.
correct. And all these stocks go up until the very end, right? Then the currency crashes. Boeing and all these companies in fart coin go to zero, and what's left is the real economy. By the way, all that is a transfer of wealth from debtors, from creditors. I'm sorry, to debtors.
Right.
The creditors, the bondholder, loses everything. But if you're a debtor and you paid $100,000 for $1 million house, now you own the house
Yep.
because there's no payback. Right, the cash is worthless.
Hmm.
So, by the way, in Germany, 1923, nothing really changed. The real economy never changed. The
Right.
GDP growth was probably 3% the year the currency really crashed. It's probably -3, right? The real economy remained. All it was a transfer of wealth.
And
So,
I
by
think
the
I
way,
think we're witnessing that right now. I think it's a slow turning
correct.
until it's not, because our friend Darkside always talks about the crack up boom, which is a Mises theory.
Mhm.
And I've had Mr. DiLorenzo on here from the Mises Institute and had these conversations before. I think a crack up boom is the most likely scenario that we will see, a big bull run followed by a gigantic crash.
I mean, yes. I mean, if you look at the current again, look at Venezuela. It went straight up
Yep.
because it didn't matter what you owned. Everything went up, right? That's a broken. That's a if everything's going straight up every day, that's a broken system.
Yeah. And we've already experienced that before. That was, the dot-com era. We went. It didn't matter what you were, where you threw a dart on a dartboard. It went up every day
Correct.
consistently for a very long time until it didn't.
Correct. Well, then it's worthless. At the end, what crashes is the currency. When
Right.
the currency crashes, another quote from Phil Knight from Nike. Right, everyone was waiting for the next Michael Jordan stock market crash on the basketball court, but he was walking up the fairway because he was Tiger Woods and he was a currency crash. Currency crash, stocks go up, not down.
Very interesting. Great point. Historically backed as well, which makes it even better.
Correct.
Well, Chris, we're way past my mark of an hour. We're at an hour and a half. I could probably talk with you for about 10 hours. You will be on our X space on Friday. This
Yeah,
this should come out. Today's Tuesday. This should come out tomorrow or the next day,
perfect.
the 3rd or the 4th of September. But you'll be on Twitter on September 5th on the Bitcoin Today X space. So we'd love to have you there. Very excited to have you on there. This is, first of all, I come across people who have economic theories all the time. Very few of them are as buttoned up as you, that are looking at things. Because here's just an ending point. You can listen to this conversation and say, this is scary, this is doomer, this is conspiracy theory, all you'd like. That's, you have every right to do it. Neither one of us care what you call us. Like it doesn't, you actually look like an idiot calling me a name. So I don't really care about that. But at the same time, understanding history, as you just stated 3 or 4 times, like we forget to read history books. This has happened before. It just has never happened here. And if
Correct.
you think that you're not vulnerable to physics and mathematics catching up with you in the end, then you are not observing planet Earth. In the end, everything ends up in a different system, and those systems don't end. It's like we're going to go through a 35-year period and everything will be roses, and they're like, hey, we're going to introduce sound money and capitalism again. That's not how it works. You have something that absolutely breaks apart. You're watching the system short circuit right now, which is why nothing makes sense. That's why you'll see a 4.5 point day on the S&P 500 and a 3.5 point day the same day in gold. Those two things don't make sense, and it's been short circuiting like this for about 7 or 8 years.
Right.
So I think that we are literally at that point where the roller coaster ends, and it ends, and you get off, you're a little dizzy, but then you realize you're on good ground, and you can go back on the roller coaster if you like. But I think that the positive message here is that this system is an illusion. I do want it to end. I
Right.
want this to end.
That's
Like
not negative. That's not doom. That's a return to capitalism. That's a positive.
that's optimism.
The system will start to allocate resources efficiently. Why is it great that GameStop goes to 20 billion and some moron that roaring kitty makes $1 billion? Who cares? Why is that a good thing? Why is that a positive? I would argue if the system collapses, it's a good thing. The global economy will boom. Real productivity will happen again. We'll start to efficiently allocate scarce resources again. The global economy will boom. That's not a doomer. That's a positive.
I agree 100%. That's why that narrative is very recent too. Like it's very like the last 4 months. It's confused. I don't participate. I don't care. It doesn't matter to me. You can call me whatever name you want. I'm cool. But at the same time, I think that just the knowledge of what could be happening. I agree with you. I think this is a certainty at some point in time. 12 months. I don't know. Maybe 12 hours, 12 years. But eventually, the roller coaster ends. And I think that this is the most positive message in the world is that if you own things like Bitcoin, gold, and silver, your future looks very bright. If you are holding on to anything else, I think that you should understand those are short-term gambling positions and they should be rotated into gold, silver, and Bitcoin. But I think if you're doing that, just keep stacking away, just keep plugging away at the sound assets that as you said, the price is infinity. It will be infinity. We don't know how it will be repriced in a new world with new currency, but this one is so broken, and we are watching the end result. Like Weimar Germany and the United States of America in the 2020s are not much different. Yes, you could say conditions were worse back then. Well, we have a lot more luxuries today to make it feel not as bad. We have televisions, we have distracting screens, we have cell phones. We aren't in the streets. You know, they were prostituting children back then to get food for the evening. We're not there yet, but that's also by design. It's very comfortable for us to go through the same economic change that we're seeing. But I agree. I think talking about the end of this system is terrible. And the argument is, well, so many people have made money. Yeah, so many people have died too, right? Like we are living in an economy that is short-term thinking. It's pirating. Like we have a very strong pirate economy. Let's see how we can build an audience, dump a token on them, make a bunch of money, be the big success story to everyone else. But all those other people lost their money because we live in a system of illusion.
We actually make that point in Money Game
Yep.
that people are dying of this, right? If you remember, so if you look at overdoses, they're through the moon. That's a
Yep.
sign of despair. That's not a sign of positive things. By the way, the top 1% in the U.S. is making all the money. The
Yep.
99% are suffering. That's not a good system. That's a bad system, right? That's a broken system. So everyone's using price and saying, "Hey, price up is good." No, you got it wrong. Price
Yep.
up is going to the rich, not you, right?
That's correct.
What they're doing. I mean, again, Gardner says, "Do you see why the rich have all the money? Their stocks are trading at infinite." Right. So what they're doing is they're protecting the rich at the expense of the poor through inflation.
That's right.
That's all they're doing. So this is not a good system. This isn't a good system for them. That's why I'm so comfortable talking about it as an American, because it's not good for the 99% in the U.S. It's great for Bezos. It's
Yep.
great for Bryson and Money Game. Both his middle fingers up, going, James, why do you think my company's trading at $4 billion? It's the concept, man. And I'm the
Right.
concept. You should listen to how little he did. I wrote up a pitch deck. I hired a bunch of freaking nerds from MIT, and freaking boom, dude. Right? He has no idea why his company's trading at $4 billion, and neither does Elon Musk.
That's right. Yeah, another comparison to Weimar, you don't need to prostitute yourself in the street anymore. We now have 10% of our women between the ages of 18 and 25 years old voluntarily doing OnlyFans because they don't see a brighter financial future in front of them. That is the worst sign in the market by far.
Wow.
Yeah.
18%?
10% of women between 18 and 25 have an OnlyFans account.
Wow.
And OnlyFans, I think, did like $9.6 billion a year on amateur pornography. So
Wow.
women are literally they aren't selling themselves in the street in Wiemar America. They're
Right.
selling themselves online in Wiemar America. It's a different
100%
transition, but the same economic conditions.
crazy.
Yeah. Chris, great conversation. Where can people find you? Tell them where to find the film, how to follow you online, all that kind of stuff. Can't wait to have you on Friday, but let them know where they can keep
Sure. You can find me on LinkedIn. I write all the time. Chris Galizio, Galizio on LinkedIn. I'm on X. And then you can, you can always contact me. It's open. You can follow me if you want. If you message me, I'll get back to you. Because to me, it's such an important topic. It's not about making a fortune on the movie. It was about getting a message out. That's why
Yeah,
we did the movie.
absolutely. Absolutely. Well, Chris, thank you so much for being here today. Thank you for sharing your opinions. Honestly, thank you for defending your stance because I already know what the rebuttals are going to be,
Of course.
and they're going to let them exist. It's fine. Like you can over enough period of time, someone's going to be right and someone's going to be wrong.
100%.
Arguing about what the future will be is completely ridiculous. If you don't like what you're hearing, turn the channel. It's not
Correct.
hard. That's
Correct.
the beauty of free speech. You have the determination to figure out what you put in your ear hole.
Correct.
No one else. So, Chris, God bless you. God bless this country. Thank you so much for being here. We'll see you all
Thanks,
next
sir.
time on the Rice Report.
Thanks for having me. I'll talk to you later.
Absolutely.